Morning, everyone. My name is Jessica McKillop, and you're very welcome today. I'm a member of the Accommodation Development team here in Fáilte Island. You're very welcome this morning to our webinar on managing your insurance costs, renewals and claims. The focus of our event today is to examine the factors impacting the cost of your insurance premium and to mitigate insurance costs. It is to help you prepare for your insurance renewal and to manage your accident and claims. Let me now introduce you to our insurance expert this morning, Fintan Kennedy of Agile Risk Solutions. Fintan has 25 years commercial insurance industry experience and works with all sectors across Ireland, including tourism and hospitality. So I'll now hand you over to Fintan, who will take us through the session, and I'll return shortly then for the Q&A. So over to you. Thanks a million, Fintan.
Thank you, Jess, and thanks for the invite on today. So today we're going to be speaking about the factors that impact the cost of your insurance. So I'm a proud Sligo man, as you can see from the Ben Bulbin there. And I'm also very passionate about the wonderful country that we have. And I'm very fortunate to have partnered with businesses in the hospitality industry over the last 25 years. And I hope something in the content today will benefit you and your business. And I do say partner because I really feel that the insurance relationship is a partner between the broker and the business. And it should be something that's mutually beneficial and that it's a sustainable relationship for both parties. Because I worked for an insurance company for 20 odd years, and now I work on the other side on the business as a partner with the businesses. So the cost of your insurance is driven by factors that are both specific to your sector and they're also generic to the insurance market. So insurance has always been a data-driven industry. Notably data looking back, the likes of no claims bonuses or a claims history and things like that. So today, what I'm going to look at is the main cost drivers of the insurance industry or the insurance premium for the hospitality sector. I'm going to set out the factors that affect the cost of your insurance premium. And this is our current reality. So my father, God rest him, had a great saying, do we light a candle or curse the dark? So we'll try to light candles today. Not a great thing to say in an insurance industry, maybe. But what's in our control in the current reality? That's what we're going to look at. So I feel there's many things that we can do to improve our situation. I'll outline the legal elements that relate to claims, and then I'll also touch on the factors that impact the property side of insurance. And finally, then we'll have a look at how we can better engage with our brokers at the two main times we need our insurance to perform. And those two times are at renewal and when a claim occurs. So a typical insurance policy includes property, liability, cyber, directors and officers, money cover. You may have heard those terms before. But in terms of the hospitality insurance premium, the most significant cost drivers are property and liability. So I'm going to look at those today. And property includes buildings, contents, and business interruption. And the cover for property is for damage caused by fire, lightning, explosion, flood, burst pipes, what's often referred to as material damage all risks, or MDAR. In simple terms, it's the damage to your own property. Then on the other side, the liability section covers claims by third parties against you, people outside your organization, but also employees who you have a duty of care, and we'll explore that a little bit more later. So I suppose I look at insurance companies are like bookies. They really are. They take a view on your risk and they underwrite it with varying odds. And then they lay off that combined risk, or that book as they call it, with reinsurers. So there are only a small number of reinsurers in the world. And as a result of that, global events have an impact on our national premiums, specifically on the property side of things. Insurance underwriters, we have to understand where they're coming from. They look at a risk and they set a rate on it. They don't like uncertainty. And as a result of that, underwriters will increase rates when we have significant global events, such as September 11th, Grenfell Tower in June 2017, COVID, as I say, climate change, the Ukraine war. So for example, no one ever expected that a plane would be deliberately flown into a building. And as a result of this, the insurance companies got spooked and said, God, we hadn't thought of that risk before, so we need to increase our rates. Even the Ukraine war has had an impact on supply chain and on the supply and the cost of a claim. So the cost of remediating things after a claim. So the basis of insurance has always been that the many pay for the few, so that we all put the money in together, so that when something befalls somebody, and befalls is an old word for it, but if an incident happens, that we pay out and we have that fund there to pay out. So liability premiums then on the other side, they're driven more by local factors. So in Ireland, our guiding piece of legislation is the Occupiers Act 1995. So this outlines the duty of care an occupier. So you as the business owner are deemed to be the occupier. And you may have seen this in car parks, you'd see Occupiers Act 1995. So visitors onto your premises fall into one of three groups, and they're defined in law in this piece of legislation as one of three groups. And each group comes with a varying duty of care by you as the occupier to the guest. So the first is the invited guest, and they're any invited guests, your customers, your employees. And with these, you have the highest duty of care to them. So they should leave your premises in the same situation that they entered your premises. Then the next you have is recreational users. And recreational users, you have a medium duty of care to them. So they may be people who come onto your premise. They may walk across your car park or go across your field. You know they're going to be there, but you don't know when they're going to be there. So you can't have, we'll say, a face of a cliff, we'll say in a gravel pit that somebody could fall across. You have to warn people about that. Then the other one is trespassers, and you have the lowest duty of care here, but you do have a duty of care. So you can't be reckless and set a trap, for somebody who comes onto your premises. They can take a successful claim against you, saying that you have a duty of care to all people coming on your premises. Now, while this legislation is being reviewed at present, as it stands, it's our guiding legislation. So we need to work around that. Since 1995, there have been different elements of precedent that have occurred. And because of those, they have had an impact on what our premiums are charged and what claims or how underwriters look at claims. The other piece there is the PIAB, the Personal Injuries Assessment Board, and you may have seen that logo there before. So the Personal Injuries Assessment Board was set up in 2003, and the aim was to reduce the time and the court costs associated with claims by third parties. And I'll speak about this a little bit later. Next piece then is GDPR. That has had an impact because it has impacted the information that we can hold and we can disclose as evidence in cases. And then just in terms of the adventure industry specifically, I would say payouts and liability claims are significant, much more significant than a property claim. Like if you look on a property, if you have €100,000 insured of a property, the underwriter knows the maximum they're going to pay out if that burns to a crisp is 100,000. Whereas on liability, somebody makes a claim against you, you've no control over what level of that claim is going to be. So what happens is insurers put a minimum premium they charge for certain activities. And you'll have seen it in the media recently, specifically in the adventure tourism side of things, where I saw one incident where it was almost 50% of the turnover of the business was what their insurance premium was put in. So you could have a minimum premium of 10 or 15,000 for public liability for someone who has a turnover of 20,000, and you could have the same premium for somebody with a turnover of 250,000 because they look at the minimum premium. So first, I'm going to look at the property and how a premium is calculated from a property point of view. So if we look at first here the three different types of buildings. So I have an office block, a hotel, and a fast food restaurant. So how does the underwriter decide the premium on those? So if we take the same rebuilding cost of 500,000, so we look at the office block first. Rebuilding cost of 500,000, they apply. So MDAR, I mentioned earlier, the material damage all risk. So what we're looking at covering here is fire, lightning, explosion, burst pipes, escape of water by any other means. So they would say, okay, in an office block, it hasn't as much plumbing, it's specifically well fire regulated, and it's specifically concrete and a roof. So they look at that and they say, okay, we'll apply a rate of 0.12% on that. that gives us a premium. So 500,000 multiplied by that gives us a premium of €600. You go on to a hotel. The hotel has more plumbing, so there's a bigger risk of some burst pipes happening. There may be some cooking going on, so there's an increased fire rate. So as a result of that, or fire risk. So as a result of that, their material damage all risks rate may be at a higher element at 0.25. So now our 500,000 sum insured attracts a premium of €1,250. And finally, if we look at a fast food restaurant where it's late night cooking, it's oil, you know, the risk with a fire is much higher of the whole premises going than if there was a burst pipe where you might have a partial loss. So in this case, they attach a material damage all risk rate of 0.5%. So the 500,000 sum insured now attracts a premium of 2,500. So these are just things that the different, so you look at an office block, a hotel, and a fast food restaurant, three different elements of risk. So I had mentioned before about the Personal Injuries Assessment Board. So I suppose this is what the movement on insurance reform is built on, really. And there are a number of amendments that have occurred, and I suppose this is what I want to show in this slide, really, is it came into being, it was mooted first in 1993, and it came into being in 2003, and there has been 20 plus or 22 revisions over the years. And although there's been many changes, legislative change takes time. But the good thing is we are moving in the right direction. And in my opinion, the onus is now on us to catch the wind on this sail and pull the evidence together to use and shift the balance of probability in our favor in the case of a claim. So the most recent change has been to bring it to the Personal Injuries Resolution Board, and the change of the name has been that. And the aim has been to remove these situations from court. And you may have heard mentioned the Book of Quantum. So the Book of Quantum is there to say that if Fintan breaks his leg and if Mary breaks her leg, and they both go to the Personal Injuries Assessment Board and they both have the same injuries and the same outlook and the same prognosis, that they would get the same fee. This hasn't happened where you depended on the judge that you got. So in this, the name, the most recent one is the name changing from assessment to resolution is a big help. Also, there are some more powers, and giving those powers of resolution, not just assessment. So moving away from, we'll say, a slow and arduous piece that can happen in court, you know, can take 5 to 6 years to come to court, and then the unpredictable awards that depending on which judge you pulled. So also the PIAB takes out the need for litigation. And that's where this mediation piece is here, that there's a mediator appointed and to adjudicate between the two. Psychological injuries are something that had become more prevalent in the last number of years. So if I was in a car accident and I broke my leg, I may also then be claiming for psychological injuries. And in the past, these fell outside of the remit of the Personal Injuries Assessment Board. So that meant that claim got taken out and went back into the courts. The other piece then is the cost implications, as I've said, because it's mediation, you can have a solicitor, but if you appoint a solicitor, your costs come out of your award, not on top of the award as happens in court. Then the final piece there is the anti-fraud measures. So there have been anti-fraud legislation in place, but the number of prosecutions has been very, very low. So this has ramped up the opportunity for claims or for fraudulent claims to experience the wrath of the court afterwards. So I suppose I want to look now at just what are the internal drivers. So what are the things in our control, or what are the things that we do that could increase the cost or have an impact on your premium? So the things you have to do because that's your business, but they are, you know, there are differences in the costs as a result of that. So I suppose in the past, insurance was risk transfer. You paid the premium and you transferred the full risk to the insurer. And now they're looking at risk sharing and how can you share the risk. So they look at your buildings. They look at, you know, what type is the construction of the building? What's the wiring like on it? What's the roof like on it? Is there, is a bigger risk of storm damage if your roof is old or new? You know, what are the contents you're holding? what type of stock. Do you have diamonds or do you have cardboard? Diamonds are a higher theft risk, but they're a better fire risk. Cardboard is a higher fire risk. So like I said on the earlier calculation, that's what they look for in that. I also touch on business interruption or consequential loss insurance. The sum insured you have on that, like do you have 100,000 or do you have 1 million? So it can attract a higher premium as a result of that. So the main piece and the main driver is the liability piece. So your public liability is or have you members of the public on your premises? What activities do you do? So liability is a civil court matter, not a criminal court matter. We've all heard a lot about the criminal court matter yesterday, and civil courts are on the balance of probability, not beyond reasonable doubt. So the onus is on us to prove that when somebody makes a claim against us, on the balance of probability, Fintan says that I fell on Mary's premises, and the judge says, well, it's Fintan's word against Mary's, so who can shift the balance of probability to their side? Insurers look at when you're responsible, so the activity that you have, the type of premises that you have, that's easy for me to say, the type of premises that you have, is it a wet premises? Are there people at heights? Is there a risk for people slipping? What type of construction do you have? Whether you own or just operate the premises is a bigger factor on your risk, because you have a duty of care to the visitor, as I mentioned earlier, and it's the same whether you own or whether you just operate the premises, because you're deemed, we'll say, a higher risk because you have a number of different locations and you have a responsibility at each of the locations. So your duty of care also to your employees is at the highest level. They are invited onto your premises. So irrespective of their role, your responsibility to each employee is exactly the same. And then finally, if you produce products like in a food and a hospitality setting, then you're an increased risk as well, or an increased exposure. So on the property side, I just want to just talk about a claim and what happens. Like a friend of mine says, some people sell a dream, I sell a nightmare. But I look at the scenario planning as to what happens in the case of a claim. So if I just give the example here of a house, and underinsurance you may have heard of, or the average clause, where people are talking about underinsurance at the minute. So if you look at a simple calculation, well, not a simple, but a calculation here that I think explains it well, is a sum insured on your house of 200,000, and then you have a fire in your kitchen, God forbid. So you get an estimate from your builder, and the builder says it's going to cost 40,000 to replace the damage that's done. So then the insurance company send out their loss adjuster. So the loss adjuster comes out, looks at the estimate, and they say, yeah, I agree with that. 40,000 is correct. So then they measure the whole premises, and this includes wall, gates, and fences. That's part of the contract, that this is what the property is. So they say, based on our measurements, the kitchen is 10% of the house. So therefore, the total rebuild of the house is 400,000. So now in the bottom panel there, the loss is now 40,000. So the way that the claim payment is calculated is your total rebuild value of 400,000 divided by the sum insured of 200,000, which means you're 50% insured. So they say your loss is 40, you get 20,000. And even if you were to change that and up that loss to 50,000, and the loss adjuster looks at it, he says, yeah, okay, 50,000, that's right. You measure the house, and she says it's going to be 500,000 for the rebuild. It's 10% of the house. So your total rebuild is 500,000. So they say you're 5/20ths insured, or 2/5 insured, I should say. So your payment would be 20,000 still. So it's just very important that you get professional advice as to the rebuild, not the market value, but the rebuild of your house. So that's just a property piece that I do feel is important for you to consider. So I suppose in this section, what I'm going to look at is I've outlined the costs and what are the drivers of insurance premium. But now what I want to look at is what can you do? What's in our, I suppose, in our remit that we can reduce the premium charge for your property or your liability. And what I want to do in that is look at who's making the decision. So you have an underwriter who is looking at, we don't want to pay out on this because I have to look at the bottom line for my company. And I have to look at, so what are their concerns? How do we, I suppose, allay their fears? So I'd look at that. In the hospitality industry, for me, I think from my experience of it, you spend your time understanding your customer. And I really would like you to consider the underwriter as your corporate customer coming to look at your business. And any customer that comes to you, you're world class. You really are. And I'm not blowing smoke. I'm genuine here that you are world class in customer service. So at insurance renewal time, I want you to look at what's your opportunity to shine. So understand the concerns, because you understand the concerns of the people who are coming into your premises, whether it's a golden years or whether it's a youth group that are coming. You understand, and you work to different requirements of your invited guest coming in. So understand the concerns of the underwriter. The insurance engagement is an exercise in risk sharing rather than risk transfer. Like in the past, it was, we'll give you 100% of the premium and you look after 100% of the risk. Now insurers are exiting the market, and it's hard to even get an insurer. But once you do, you want to see, how do we share the risk? So do we have, you're going to take it, cover me for fire, but I'm going to have fire alarms, or I'm going to have fire extinguishers. I'm going to have CCTV. I'm going to have SOP, standard operating procedures for liability. I'm going to have training and sign-offs for my employer's liability piece. So I suppose I'm going to ask you now to give my voice a rest for a second, and I'd like you to look at this poll. And what mitigations have, and I just want to get a feel for what you have. What mitigations have you in place to improve? We look at the property risk first, and so what have I've here? I've fire extinguishers, I've automatic fire suppression systems, electrical rewiring. So can we highlight these things to our underwriters and to our broker when it comes to the renewal? So like the fire extinguishers, have you up to date testing on the fire extinguishers? Have you the fire suppression system? That's, we'll say, if you've cooking, if you have a deep fat fryer, having an automatic suppression system that if the fire gets, if the oil got out of control, there's an automatic system that closes it off. Do you have flood barriers? Are you in a flood risk? Do you have automatic frost stats? As a result of the big freeze in 2009, insurance companies never looked for that. They now look for those things because there was massive risks with burst pipes as a result of the loss then. So maybe we might have a look at the results of that. So that's as I would have expected. We have 67% have fire extinguishers, because we do have people who don't have property, and that's where I will talk more about the liability on the next section. Automatic fire suppression systems, there are a number, 17% have that. Electrical rewiring, like if you have an older building, having it rewired and telling many times people have rewired it and not told their insurer about it. Have you a flood barrier? Because even in the case of a claim, you rarely get paid for all the heartache that goes with it. So can we stop that? And that's where the flood barrier or the fire extinguisher, can we stop it at source, or the suppression system? It's the knock-on pieces that happens, like the rebuilding cost. You're not builders. You're in the hospitality industry. You don't want to be spending your time rebuilding. So that's just a piece on the property. It's interesting just to see where everybody falls in on that. So I suppose on the next one, I'd like you to look at our liability cost mitigation. So what things have you in place? So it's just a poll of a number of things. What things have you in place to improve to improve the risk and to show the underwriter? So I've industry standard awards. What are your industry standard awards? Have you shine a light on what's good that you've done? You're top of your industry, because underwriters will look at, and insurance companies will look at, the lowest common denominator. So if Fintan and Mary have the same business, Fintan's business, we've seen a lot of claims in it. Mary's in the same business, so she must be the same. Whereas Mary may have, be the top in her industry. She may have risk assessments in place. She does the risk assessments for all of the work that's carried out on the place. She has safety statements. Body cameras are becoming more and more prevalent, providing evidence of what you saw, so that and what happens in an event. Employee apps. I say that employee apps, like, do you have, my daughter worked in SuperValue in TY, and when she moved on to from the onto a news section, she had to complete on her phone that she had been trained on it, and basically what she was doing was signing off on her phone that she had read the safety statement and had read the risk assessment for the work that she was going on to do. So it's just, have you got those? So maybe we'll have a look at what the poll is showing on that. So industry standard awards, like these are the pieces within Fáilte Ireland. Like the most recent piece, in terms of training, what training have you got? What are the employee training that you have in place? Like having somebody outside of your business assessing you and having a record of that. It shows a great, like, insurers love to see that, because they love to see that somebody else is looking at what you're doing. The risk assessments, having those done, having a safety statement, and keeping those things. The employee app, what I look at with that is keeping it dynamic. That if you have an employee app of what people check in and how people sign into work, or how people are updated on their roster, maybe you could keep a piece every 6 months that they sign off on the risk assessment, that they've reread the risk assessment, that they've reread the safety statement, because then that puts a stamp, a time stamp in place that Fintan has reread the safety statement. So once we've and thank you for taking your time and for giving that feedback on that. So what we want to do now is, how do we go about preparing for our insurance renewal? And like I said to you, there are 2 times that you need your insurance to perform. Once is at renewal, and the other is when there's a claim. And to be honest, usually when there's a claim is too late. So how do you set things in place and prepare for the renewal in good time? So I suppose here the Renewal Programme Act now, I mean, this is maybe a bit dramatic, but I really, really think that it's up to us to take control of this contract that we have between us and the insurance company, because that's what it is. It's a business contract that is written by the insurer, but that we've signed up to on the first day of the renewal date. So the renewal date is your target, but what I'd ask you is to start way back, get there. I have a checklist here and a timeline that we'll give to you after, that's downloadable, and you just input your renewal date and it will calculate the date that you should be starting and having things in place by. So what I would look at here is, you have your renewal date as your target, but start way back, start 90 days back, and look at what are the internal things that you can do. What's the rebuild value? As I said, get some professional advice on that. Wages, have you increased wages and salaries? What's your gross profit? Has your turnover increased? If you have a business interruption, please. Most importantly is your business description, because your public liability relates back to your business description. So for example, if you're a hotel and you start doing a building project and you build on an extension, your business description as a hotel does not cover you for building an extension. So or if you decide to change something during the year, just check it with your underwriter and with your broker, I should say, that what you've done. Then the other piece to check 3 months in advance is get an update on claims. Close off the inactive claims. Like, it's important we report claims when they occur, but we're reporting for notification only. And update the reserves, because get an update from the insurer, because the insurance company put a reserve on a claim when a claim occurs, when a claim is notified. So they treat that as if that was a payout. So has nothing happened in the last 2 years on a claim? So can we close that out? Speak to your broker and have a claims meeting, 2-3 months in advance to see what's happening on it. Then also check with the broker, are there new entrants in the market? Are there new people that we should be getting to come out and survey our premises? Then provide the updated renewal details 2 months out from renewal. And then 3 weeks before, get your renewal terms. You're obliged to get, or the broker is obliged to give you renewal terms 21 working days in advance of your insurance renewal date. And then at the renewal date, familiarize yourself with exclusions and warranties, because you're signing this contract, and get them explained to you if they're unclear. So just, you don't want to break any of the terms of these contracts. And then also agree those service level agreements with your broker of what the service is going to be. So this is you can download this checklist. This outlines the different times here. You put in the renewal date, and this will outline the different times that that you should work through. I think it's pretty self-explanatory of the times, and just check these off and check them with your broker. Like, renewal date is the target, so you work your way back from there. The other element that we want to look at is accidents and claims management. So in that, as I said, it's all done on the balance of probability. It's just looked at, what is the balance of probability? Is it with the claimant, or is it with you, the defendant? So can we shift that balance of probability over to your side? So when an incident happens, get the date, write down, you'd be surprised what happens. Take a statement from everybody who's around, anyone who's involved. Maybe in that statement, something like, it was the day Ireland played England and won the Six Nations or the Grand Slam. Because you'd be surprised, in 6 years' time, when that came to court, you mightn't remember things as well. But having it click like that can really help. Take photos and videos of the time. Are there any photos and videos of the time? Take a photo after the event. Is there video pre the event? We would have in the past downloaded sort of 30 minutes in advance of a claim, just to show, this is what we actually do. This is what happens. And before we had a claim, this is what we did. We went around, we picked up papers, we cleaned up messes. And with that, you're making the judge a witness to the incident. So that's shifting the balance of probability, because, as I said, Fintan goes into Mary's premises and says, well, because of Mary's negligence, I have a broken ankle and I've lost out on my modelling career is gone. But if Mary can say, well, actually, his footwear was poor, there was no slips on the ground, or no slip hazard on the ground. We had tidied up everything. Here's our training records for the cleaning, and here's our video. Here's our photo of the incident. There's nothing on the floor. Here's the statement of 4 people who witnessed it, and they didn't see any negligence on our behalf. And then I have other pieces like training. So if it's an employer's liability case, have you evidence of training? And like I said before, can you date stamp that, well, we showed Fintan, we trained Fintan, and here's 6 months ago, he read the risk assessment, and he has signed off that he has read it, and he has read the safety statement. So just, your records should be good enough to stand the test of time, so that ultimately it could end up in court. But what you want to look at is, if somebody goes to make a claim against you, and they with their solicitor, they look at it and they say, God, these people have a lot of evidence. Do you know what? The juice isn't worth the squeeze here. I think we'll move on to somewhere else. And that's what we're looking to get. So they're the 2 checklists that I'd like you to take away. I think I've nearly talked for long enough. The key takeaways that I'd like you to take from today are, there are 2 times you need your insurance to perform. Once is at renewal, and the other is if a claim happens. Then the other, take control. I understand the reality, and I understand the frustration. I really do. I've seen the frustration, and I've been extremely frustrated by some of the awards that have been made. But what can we do that's in our control? We can prepare for our insurance renewal as we would for the bank, because this is money in your pocket. It really is, and it's important that you prepare for it that way. Building costs, get professional advice. Get evidence of everything before, and get professional advice. What is the rebuild? Not the market value, the rebuild. And then also, have you robust processes in place that will shift the balance of probability to your advantage if a claim is made against you. So have you got, the systematic things in place? And that's what I say, systematically update your processes, so that there's something that automatically updates your processes to say this is the most up-to-date training that we have in place. So I'll pass that over now, and I think I'll take a drink if that's okay.
Thanks so much, Fintan. That was really comprehensive, an excellent presentation, and absolutely do take a drink of water there, or if you have a cup of tea before we get into the questions that have come through from our virtual audience today, and indeed in advance of the webinar. So like I said at the beginning, we will share all the material, the recording, the checklists and the slides in the following days as well, because there was a lot of material there to get through. So I'm just going to move to the questions, Fintan, if that's all right with yourself. So we'll kick off with the first one. The first one is, are businesses rewarded through lower premiums if they make no claims, like a no claims bonus reward?
Are businesses rewarded through lower premiums? Well,
if they make no claims.
There isn't actually a no claims bonus in place for commercial insurance, but what can happen is you can get a claims loading as a result of having claims. And I suppose this is where I was talking in the renewal preparation piece, that it's very important to update on any outstanding claims in advance of renewal, so that you can get any inactive claims, or claims where there hasn't been anything happening, or any solicitor's letters or anything on it, that you can get those closed off, because they have a reserve attached to them that are, as such, they're a blemish on your record. So you don't want to use this as a reason not to notify of an incident, but you have to notify when an incident happens. But you also want to use the renewal to close off these times as inactive. So it's not that there's a no claims bonus, but there can be a claims loading.
Perfect. Thank you. We'll move on to the next question, if that's all right. Do insurance companies increase prices if the business is showing profits? That's a good question.
Yeah, it is, and it's very relevant at the moment. They won't per se increase premium if the business is showing profit, but if you have a business interruption insurance, a consequential loss, and we'll say you showed that you have an increased profit, then your sum insured increases, so then the premium will be higher for the higher cover. But I suppose what's happening more recently, and it was highlighted in one of the pieces that the IAAT did with where they were saying about there has been an increase in turnover because of increase in cost. It's not an increase in footfall in a place. So it's important that and that may cause an increase in your public liability premium, because your public liability premium is calculated based off your turnover. So it's important to, I suppose, to explore that with your broker. That yes, our turnover has gone up, but it has gone up because our costs have gone up. It's not reflecting a higher footfall or anything.
Perfect. Thanks, Fintan. We have one here from adventure tourism businesses, actually. So are adventure tourism businesses in Ireland paying higher premiums than their European counterparts? And if they are, why is this the case?
They are really, in short, because of the awards that are made here in Ireland. There's very little recognition of whiplash in French courts. And also, like, if you look at the payments made out in Spain, the pavements in Spain, you'd wonder how people can come safe walking along, but because there isn't a history of payments in the legal system in other countries, in some of the other countries, and that's why the improvements in the PAIB or the PIRB now, it gives us hope that there'll be more attractive market for insurance to come into. Like, there's been an awful lot of insurers leaving the market. So it's encouraging, to be honest, for me. I think I really see a chink of light now that the momentum behind the insurance reform, it's slow, but it's coming in the right direction.
Coming in the right direction. Okay, Fintan, we've another question here around insurance costs. Somebody's asking, what do we not mention to keep costs down?
We don't not mention anything, to be honest, because the only one to gain if you don't mention something is the insurance company, because the insurance contract is a contract between you and the insurance, and the basis of insurance has always been utmost good faith, and it's on both sides. So it's important that you mention everything, to be honest, because in the case of a claim, the insurer is going to come out and check. So, and there are also conditions precedent. It's as I said, it's a contract. So it's a contract between you and the insurer. So there are exclusions and warranties, and get those explained to you, as I said earlier, because the insurance company are going to come out and investigate your premises after a claim happens. So invite them out and document that you invited them. And if they don't come, then that shifts the balance of probability to you. But they'll make requirements and recommendations. And to be honest, that's an opportunity for you to show yourself in the best light, that you can repeat, you can do some of these, look after some of the requirements they've asked for, and challenge them if some of those requirements are, challenging and impacting on your business as well. But it really is an opportunity for you to show yourself in the best light and like I say, take back some control.
Absolutely, and to have some of that preparation work that you spoke about during the presentation done in advance. Yeah, absolutely. Okay, another question here. Our insurance has gone up by 50% because we have 3 spurious claims in 2022. We're not the plaintiffs going to pay the costs?
I'd love to know that myself. I really would, because you do see so many times that cases come to court and the judge says, go away and have a think about it, and then they come back and they say, actually, we're pulling that claim, and we're not continuing our claim, and that ends up it's so frustrating, but if you can gather all the evidence on these claims, that these claims are there, and you're able to say, because I suppose there are 2 questions in that: or when are the plaintiffs going to pay the costs? I don't know, but our insurance has gone up by 50%. Can you look at gathering all the evidence that's up to date that you have on the claim, then gathering all the evidence that the insurance company, has there been any negotiation with the solicitor, or has the solicitor just left it? Find out if the insurance company are holding a high reserve against it, and what's the basis of the reserve. And then have you evidence about the claim, that you can have concrete evidence that can allay their concerns, so I get that claim closed off. So that's those spurious claims are so frustrating, but it's trying to get them closed off and off your record is important.
Thanks, Fintan. Another question here: does the insurance industry understand the adventure activities industry?
I don't think they did, to be honest. And as I said, by their nature, insurance underwriters are cautious, so the adventure industry is not something that they see the nightmare, not the dream of the adventure industry and the joy that it can bring. But I do believe that because we've been proactive in informing them, and I think in terms of the work that has been, I was at the IAAT conference in Sligo last year, and it was really interesting. Like, people are so engaged and so concerned, and they're really putting all the things in place and getting frustrated because they are putting so many mitigations in place. But I think oftentimes it can be getting that first insurer to take you on, and having the scheme that they have in place now, has got that through that first door. Now you're building up a bit of a record. So can you see what their concerns are? And I think that's what has happened. Like, they've been very proactive. So if you can get an insurer on, and they can show you a track record, you can show evidence to support a claim defence, and like I said, make the judge a witness and shift the balance of probability, then you're helping them. And I think they're a good example of a group who have helped, gone and lit a candle rather than cursed the dark.
Thanks very much, Fintan. Just looking down at the remaining questions here, we're fairly getting through them, but we might just take another, maybe 2 more, if that's all right, Fintan.
Okay.
So how do we guarantee that a broker allows for due time to consider a final offer of cover well ahead of the renewal date?
That's the piece, of taking control, taking control of your insurance program. Start the process in time, and engage with your broker, and invite your broker to come out. Invite them for a meeting, and use that checklist that we have there, and see, where are we, how are things going, what can we do to you know, to start that conversation. What are the conditions? What are the problems? You know, and let's allay their concerns. Let's build this partnership and work together for both.
Perfect. Thanks, Fintan. And we just have one final question then, if that's all right. Is there a way to reduce premiums in the off-season months? It's just come through from our audience here as well.
Yeah, I suppose there probably isn't really, because insurers look at the risk overall, and even though you may have the bulk of your revenue generated in a short time, they're going to factor in the risk that comes in, whether it comes in a month or whether it comes over a 12-month period, and they will come up with the same premium. But something that I kind of advise people that I work with in this sort of a space where it's very seasonal is, you know, having your insurance renewal date a little bit before your busy time. So first of all, you're not trying to negotiate at the busiest time of the year, and just have it that it can help for cash flow purposes as well, because you may be able to do a payment plan while you have the, you know, cash coming in. But insurers look at the overall risk of the turnover of the building, of the activity, we'll say. So if it's an activity that's seasonal, they would look at it and say, well, you know, over the full course of the year, this is how much it's going to be, whether that's 2 months or whether that's 12 months. And I suppose one thing just to be cognizant of in that piece is that you that you explain it to the insurer what you're doing, and you're probably better to have a renewable premium than a one-off premium, because you're having to start to push the car again each year, and you're better to be keeping the track record, but that they recognize, and it's explaining to them that your turnover is generated in 2 months rather than 12.
Perfect. Thanks, Marion Fintan. That was our last question that had come through, and I don't think there's any more there coming through on the chat. So look, if I could perhaps thank you for your very comprehensive presentation today, and for answering all of those questions for our virtual audience, and indeed thank our virtual audience for attending, and to reiterate that we will share, of course, all the material, recording and the templates, Fintan, that you had presented there during the presentation with everyone over the coming days. And I might just ask for some feedback on the webinar, if that would be possible. So we're going to put up one final poll there. To what extent do you agree or disagree that the webinar content and materials will help you implement the learning? So I'd appreciate if everyone might be able to complete that, and just like to thank you all for attending again today, and to have a nice day for the remainder of today. Thanks very much.